Welcome to this brief introduction to the Advanced Performance Management paper. Not so long ago this was called P5, and some of you may have tried P5, or you may come across references to paper P5. It has changed its name to Advanced Performance Management, but so far there have been no material changes to the syllabus. It does very much follow on from what you have already covered in F5 or Performance Management, and either the old P3 paper or it's been merged now into the Strategic Business Leader paper. So there's quite a lot of material, if you like, say to do with variance analysis, or maybe to think about budgets, or from the Strategic Business Leader or P3 paper, the idea of the effect perhaps of the environment on performance, or the competitive environment in which a company is, and again how that may well affect performance. Transfer pricing is in there again as well. Overall, I would say that for this paper there is not a huge amount of new technical material, certainly compared to what you have to learn for business reporting, the financial reporting type of paper, the old P2, or as it's now called, the Strategic Business Reporting paper. It is, however, although not much technically new, the questions are very different. They require a higher level of analysis, a more mature method of looking at the problems. Although you can have to do some calculations, you might have to do variance analyses, for example, it is much more likely that perhaps you are presented with a variance analysis report and asked about what you could conclude about the performance of the company and how you might take corrective action. The emphasis is on performance management. So let's look at the main categories of the syllabus here. Use strategic planning and control models to plan and monitor organizational performance. So you can be talking about, for example, what a mission is, and in a way you can't actually measure performance until you have an idea what the organization's mission is, its purpose is, because essentially that defines what is meant by good performance. It is by no means just making profit, because you could easily be presented with a non-profit seeking organization. Some of the control models basically got an idea of feedback. You set a budget, you look at the actual, you look at the differences or variances in there. That is a control model which you may have to apply. The second part deals with the impact of risk and uncertainty on organizational performance. There are, of course, well-known techniques to deal with risk and uncertainty, like expected values, like minimax, maxi-min regret, and maxi-max, and all those elements. You may be asked to look a little bit at how reliable forecasts are, and of course be open to adjust forecasts in the light of what actually takes place in the environment. So if the environment faced an economic downturn, then of course you know that the organization is almost certainly going to be hurt by that, and therefore, for example, a flex budget might be an appropriate way of dealing with that, so you can more accurately measure performance. Identify and evaluate design features of effective performance management information monitoring systems. Now this is quite important. There are almost two types of question, both of which mention performance measurement, but one is actually judging the performance of the organization, saying whether it's good or bad, and one is judging the way the information about performance is presented to you. It's really a critique of the performance reports, not their content, in terms of have we beat budgets or have we come under budget, but the content of actually the sort of information it holds. Is it too cluttered? Does it omit information that we'd actually really like to see? For example, I have seen a question where there were 4 divisions in a company. It showed the 4 revenues up there, one for each of the divisions. It showed the 4 costs down there for each of the divisions. But nowhere in that performance report had it done the very simple exercise of subtracting costs from revenue to give you the 4 profits. And if you were the manager of this organization, you would be, I would hope, deeply frustrated that just the arrangement of the information, the presentation of the information on the performance report was completely inadequate. Apply appropriate strategic performance measurement techniques in evaluating and improving organizational performance. So the sort of strategic performance management techniques you're likely to come across, 2 of which of these 3 you've got to have seen before. There's residual income, there's return on investment. And one of the big new areas, and one which is likely to give you the most kind of tactical problems, in fact, is something called economic value added, or EVA, which is a method where you adjust the reported profit. All sorts of adjustments that may seem odd to you, like adding back research expenditure, adding back marketing expenditure, because if you don't spend on research and marketing, then the future of the company is going to be in some jeopardy. But if those expenses are deducted from profit, then you can be making the division or the company look poor. So you add these back. They're regarded more like investments for the future, almost like capital expenditure, not allowed for financial reporting, but an adjustment made for performance management to encourage managers to keep ploughing money back into the future of the company. And finally, advise clients and senior management on strategic business performance evaluation and on recognizing vulnerability to corporate failure. In other words, draw some conclusions. So basically, you could really almost put this paper into the following. First of all, what do we mean by performance? In particular, by good performance. And for that, you go back to the objectives and the mission. Second, you have to decide what measures could I actually take that is going to either directly measure that performance or at least be a proxy in measuring that performance. So you might say a good relationship with customers is going to be effective or important in performance, but how are you going to measure good relationships with customers? There isn't a kind of ready-made way of doing it. Maybe what you have to do is to invent assessments that you send out to your customers and they report back on you. So we know what we want to measure. We've devised ways of measuring it. Then you have to report it, and you have to report it in a way which brings to people's attention the really pertinent and relevant information. And then you have to make a judgment. And then what you have to do, because it's performance management, you may have to say, in the result of this division not doing very well, how should we perhaps go about changing what it does to try to move it towards a more satisfactory performance? And of course, if you can't do that, if performance is bad and stays bad, then the last bit of syllabus area E may become relevant, which is recognizing vulnerability to corporate failure. Immediate vulnerability to failure is bad cash flows. You run out of cash. That's a very quick end to a company. But we would hope until we get to a very kind of emergency situation, we might get a little bit of advanced warning, like profits declining, or the liquidity declining somewhat, or perhaps the the drifting away of some of our customers and so on, and our market share declining and so on. And if we get this kind of advanced warning of trouble, maybe in 3 to 5 years, then it gives us a breathing space in which perhaps we can take action to save ourselves. Shape of the paper. All of the questions are basically scenario-based. They're case studies. Section A is a large case study, 50 marks, several pages of information. It will be broken down into several parts, of course. And it will concentrate on areas, syllabus areas A, C, and D. So A, C, and D up here. Use strategic planning and control models. C, identify and evaluate, if you like, good and bad performance report. And D, how you're going to measure it, appropriate measurement techniques. Section B has got two 25-mark questions, and one of these will be on Section E. That is where we're going to make a judgment on performance. Here, advise clients and senior management on strategic business performance evaluation. And less often, perhaps the warning about future corporate failure. So future corporate failure is, if you like, a minority topic, if you like, within Section E. The majority one, the important one, is being able to draw conclusions about performance and say, here are the three things you need to do better to rescue yourself from potential failure maybe coming into the future. As always, it's very worthwhile going to the ACCA website, go to the student section, select the advanced performance management, and you'll see their past papers, you'll see their specimen exams, you'll see their articles from the examiner, you'll see examiner reports and so on. There's a whole wealth of really useful information. What I would say is when doing the paper, when studying the syllabus, studying our notes, listening to our lectures, an absolutely key element is for you to try questions. As I say, quite a lot of what you are doing will seem to be revision, and you kind of think, well, I know that. I'm not going to spend very long on it. But, the pass rate of this paper is about 30%. And it's because people don't do the questions right. They don't assimilate the information in the questions. They don't address the requirements. And they don't give what you might call good professional advice. And it's only through doing questions and practicing questions, seeing the way these topics are actually examined in this exam, that you're actually going to improve.